Lagos, Nigeria's financial capital. This is Business Morning, Friday, March the 3rd. I'm Business Number 5, and I welcome our viewers here and around the world to the program. Let's get the next 1 hour together. We'll wrap up the business weeks, and we're starting with some of the headline-grabbing summary for you. Let's start with what we call Soludo's economic solution. Nigeria's former Central Bank of Nigeria chief, Professor Chukwuma Soludo, has said Buhari's administration has worsened the very bad economy that President Buhari inherited from the Jonathan's government in May 2015. The former Central Bank chief says, quote, in part, Nigeria today is a fragile state with a failing economy. Some say failing state, some say failed state. So Professor Soludo went on to say that, quote, the economy is not just in recession, we are suffering from massive economic compression. Saying it is recession trivializes the issue, end of quote. In a very swift reaction, the presidency reacted and says that, in part, that Nigerians now know that Buhari's administration inherited a sorry state of economy, but the administration is working diligently to fix it, with positive results now emerging. That's some conversation on the streets. It's going to take a couple of more days for these to go round across the media and social media, in fact. But one good news is out from the Bureau of Public Enterprises in the turnaround of the only commodity exchange Nigeria has, called the NCX. The Bureau of Public Enterprises says Lead Capital Consortium leads two others as the selected advisors for the turnaround of the moribund commodity exchange based in Abuja. The commodity exchange was established in 1994, but has been lackluster, went through hard times, and almost closed shop. Now the BPE says the Nigeria's Sovereign Investment Authority, NSIA, is bringing money and expertise in there, and three advisors been selected, led by Lead Capital Consortium, to assist NSIA in getting the commodity exchange back on track, and that is some news you can use. Meantime, the Central Bank of Nigeria continued to intervene in the market. This time, today, March the 3rd, Friday, the financial regulator plans what you call book building. That's a technical language for it. What it means is this: you pay today, you get delivery in 2 weeks' time. In other words, commercial banks have been asked by the Central Bank of Nigeria to make Naira cover for their clients or customers that want to import machinery, airline equipment, and petrol products. If they put the Naira down today, they will get the foreign exchange delivery, or foreign currencies delivery of those Naira in 2 weeks' time. So that's called an FX book building foreign exchange, and that is expected to take place today. So let's do a quick review of the Thursday's market. We're just finishing. We finished, and we're starting with the bloodletting on the equity side yesterday. No thanks to Dangote Cement, the largest company by market cap in the Nigerian stock market. So with Dangote's 4.99% haircut on Thursday, the market took a beating, 1.4%. Dangote Cement dragged the industrial goods sector a negative 2.51%. Things perhaps could have gotten worse. The rest of the sectors of the market were a little bit positive. The oil and gas added 0.6%. Consumer goods are about a quarter of a percent, or 0.75%. Insurance 0.15, and of course banking 0.11%. And you can see the market cap there, 8.59 trillion. We started the week around 8.7 trillion, didn't we? Okay, let's move on to the NESD. Okay, look at the volume and value as well as, okay, quick one. Thank you, folks. The volume, 186 million, is down 18.43%. Since the year started, the stock market is now down 7.61% on the all-share index. We're now below the 25,000 index reading. So move on to the NESD OTC Securities Exchange, where we see the first grey shoot in the week, 0.04%. The index, the USI, 611.72. That's a little bit tepid, as it were. Look at the volume, 682,000. If you flip that over, you see less than a million shares. Naira value, 3.81 million in 15 deals. A bit of a quiet Thursday for the unlisted securities market. Now, so let's go to where a bit of activity were with the FGN bonds via the FMDQ OTC Securities Exchange. That's where the Eurobond $1 billion is being listed this morning as we speak, 10 o'clock local time. And we're going to talk about this a little bit later on the program. Temple Ashaju, who is a market correspondent and a producer here on China's Business News, will be talking to us at about 10:45. To bring us up to speed what the listing is all about and what we're gleaning from the debt office. But quickly, look at the FGN bonds. A very quiet Thursday, quiet but a bit of activities. Those are the three transactions are the FGN bond market via the FMDQ on Thursday. The highest transaction of 26 billion in the midterm paper, March 14th, 2024. In volume terms, if you flip that, that's just about 26 billion in total of 14 deals. And that finished off Thursday for us. That was the day the central bank that did a massive treasury bills auction. Now go to the treasury bills and see a bit more of activities there. And of course, you've seen a lackluster in the market because the FMDQ OTC Securities Exchange told dealing member banks that they will not be obliged to trade or show two-way quotes between Thursday and Friday. That ends today. So it's going to be a brand new market on Monday when we all come back, and we hope things stay that way. But that's what we saw. Look at the 81 transactions in the Treasuries matured in 15 June 2017 at 18.45% discount high. So if you look at the total transactions yesterday, that's quite amazing, isn't it? Bottom of the barrel, 8.33 billion naira only at the secondary window for treasury bills, and that was because between Monday and Thursday, the central bank wiped out hundreds of billions of naira via two auctions, open market operations on Monday, and on Wednesday, the primary market auctions, 312 billion naira. So liquidity in the system was really, we're just starting today with about a very small amount, trying to get that figure out. We have less than 70 billion naira now as system liquidity. That's not enough to rally anything. So perhaps you're not surprised what happens to equities therefore. But look at the currencies market, where I'm sure some of our viewers, before currencies, let's look at the S&P Nigeria bond index. That was the index that was signed together with the FMDQ just about a couple of weeks ago. So we're starting from today to show you what you're looking at now on your TV screen. That's the S&P Nigeria Bond Index. The S&P index level is now 263.74 reading. 1 day movement as at the 1st of March, that was 0.04% positive. Month to date, it's not changed because we're just starting the month. That was Wednesday, isn't it? Yeah. So that's just about 2 day window there. You're looking at Wednesday versus Thursday. Today will be the third trading day. Quarter to date, 0.60%, and year to date, sitting at the same percentage point as at the 1st of March. So you're going to see that regularly on Business Morning and on Channels Television. We're bringing that S&P Nigeria Bond Index, a new one, into the conversation so that you can get a better picture and a global picture, as it were, of Nigeria's Naira bond market. Look at currencies. Part of this already on the street. The Naira was unchanged at the interbank OTC market, 305.50. Against the pound, the Naira gained about 0.5%, 388.24. On the euro, fell about the same margin, 30.74. At the street market, the Naira fell throughout on Thursday. Okay, look at the numbers, almost 1% against the British pound. Okay, let's leave it there and move on to the stock market, where Chukwuemeka is joining us now to talk us through 1.4% decline on Thursday. Chukwuemeka is the head of research at GTI Securities. Chukwuemeka, good morning.
Good morning, Bosun.
Yeah, a very blistering Thursday. What happened?
Oh, well, the effect of poor results for full year and, of course, apathy from investors, and also largely owing to the fact that we have a larger play of local investors, all culminated in what we saw yesterday. We saw, in what I suppose an exaggerated response to Dangote's performance for the full year numbers, I think the negative sentiment was not as... It wasn't expected, if you ask me, because I think, like I said earlier, the reaction was just exaggerated.
Well, Chukwuemeka, I wanted you to talk us through three major earnings this week. We had Zenith, we had Dangote Cement, you talked about, and we had Nestle. Nestle was a very surprising decline. Dangote Cement managed about almost 3% net profit, and revenue jump about 25%, but Zenith was also positive. But again, Nestle was a major slap in the face, if you want to put it.
Yes, well, considering the fact that it's a stock that has traded at 1,000 naira at some point in Nigeria, I think the first and only company to have traded at that point, on a per share basis, has traded at 1,000 naira. I think a lot of people just had this unreasonable expectation that Nestle was going to outperform themselves. But the truth is, I take a lot of positives away from the Nestle result. I think the fact that a company as big as Nestle is still able to push up to a double-digit growth in revenue, for me, is an exciting point. I think we saw pressured earnings on the bottom line, largely because of the macroeconomic challenges that the country is facing. And truth be told, for a country that is in a recession where disposable income is pressured, one doesn't really expect that there would be as much growth in both top line and bottom line as when you are in a boom period in the economy. So a reflection, and of course, we've seen what happened with the exchange rates, pushing down or largely weakening close to the dollar, and a lot of these people bearing the burden on input costs. So for me, it wasn't surprising. I'm actually more excited about the fact that they were able to grow their top line, because for me, a company like Nestle still being able to manage a double-digit growth in their top line is an impressive performance for me. I think every other thing, once the economy resets itself, is adjustable. And for the efficiency of Nestle, I think in 2007, I think, I'm not exactly sure now, it was the only company that had a returns on equity of 100%. And that, since my career as a research analyst, is the only company I've seen in Nigeria, to get close to that element. So I think, for me, it's a country that has its bearings as far as controllable cost line is concerned. So I'm excited that they were actually able to grow revenue. And not trying to excuse the company, but I think they just were a victim of the macroeconomic instability in the country, and that's expected.
Victims of circumstance, isn't it? I guess everyone, you got to blame it on the economy. Chukwuemeka, we got Onevan there, who is the group Managing Director and Chief Executive Officer of Dangote Cement, in the studios. He'll be talking to us in about 15 minutes from now. I'm not sure you want to miss that. Hear a lot more insight from him about what happened in 2016 and the way forward for this cement giant and one Nigerian company doing the rest of the country proud across many frontiers in Africa. So you don't want to miss that. Thank you very much. Do enjoy your weekend and stick around by your TV. For about 15, 20 minutes, I will get on in the studios to talk to us through the numbers from Dangote Cement. Thank you very much, Chukwuemeka from GTI Securities. We have a lot to chew, but don't forget our social media, Twitter handles at Channels TV. You can put in your comments and your thoughts, or at Biz Morning, or at CTVR or at B Bolson. Let's take a break. We'll be right back, and we're talking energy.